Hello traders, Gary Wagner here, approximately 10 minutes after 11 in Honolulu, 10 minutes after 5 in New York. Yellen is expected to speak momentarily, but some comments have already been released by her, which in essence say most on the FOMC expect a 2015 rate hike, or as she puts it, liftoff. Of course, any reaction to the equities markets will not be felt until tomorrow. Market did trade down today off about 78 points, 16,200. That's in the Dow Jones Industrial Average. S&P trading lower also on the day, roughly off about 9 points at 1975 on the day. Now, the only place that we're seeing any kind of reaction in the market that we can, in other words, markets that are still open, is the U.S. dollar, for example. When we take a look at the low 95.45 and currently at 95.90, you can see that it's really come off the lows. However, it's still trading pretty much mid-range. And as I said, many are awaiting a talk from her in which, as I've said, she has stated that she is expecting, along with other members of the FOMC, to have liftoff sometime in 2015. Now, traders, I certainly cannot speak to the fundamentals in terms of what Yellen might say and how that reaction is going to be, but I can address the technicals that we've been looking at, specifically in the Standard & Poor's and the Dow Jones Industrial Average over the last few days. And in essence, I originally had thought that we might see a kind of a peak to the upside. Before we look at some of the other indicators, I do want to look at some straight candlestick charts. This is a half-a-day chart. And what we noted was that, in essence, what we were seeing was an ascending bottom, meaning a series of higher lows, but at the same time, in essence, a flat top. I mean, aside from this one spike up, we've really had some real resistance right in this area. Now, behind this basic strategy or theory of a compression triangle, or in this case a pennant, but a compression pattern itself has a couple of key characteristics. The first key characteristic, of course, is that you get a narrowing of range. And as you get that narrowing of range, energy builds so that when you get a break either to the upside or the downside, that energy supposedly is released. Once you have that release of energy, what you're really witnessing is a strong break to the upside or downside. Now, I had really looked at the potential for that break to be to the upside up until a few days ago. Now, what changed? Well, what changed was we actually broke below the particular lows on this ascending bottom and started drifting lower. Now, this is a half a day. Let's go ahead and bring up our single day chart. And in fact, when we look at our daily chart, it becomes a lot more, I believe, evident. Now, I'm taking out that low. I'm using these lows here. And that's where we had our initial break. So a couple of days ago, actually 3 days ago, we saw this actually break below. We noted it yesterday, saying that we're probably going to see this market break to the downside. And in fact, we have seen it break a little bit, but not a tremendous break. We also talked about the fact that we met our initial criteria for the top of this particular wave, which was an A, B, C formation. Now, all of that being said, I am noticing something again that I find absolutely noteworthy. I'm not so sure what to make of it yet, but that is the fact that we've got this long tail again. In other words, we talked about the fact that at these market bottoms and at market tops, here's a shooting star, here is a hammer, although you really can't call it a hammer because the body size is too large, but you've got this long protracted tail. You also have the market coming off of these lows here, trying to attempt a rally as it stages and moves back up. So right now we are still in a holding pattern on the S&P. As I said, the most likely in terms of the technical indicators is that we see it break to the downside and not the upside. Now I'll go ahead and pull up a couple of our other key indicators, this being our moving average, convergence, divergence, MACD. Without a question of a doubt, we haven't hooked yet, but you can see the potential for the hook, shorter term moving under the longer term. Also, when we look at the momentum, although it's still in positive territory, there's no doubt, look at the basic decline that we have seen over the last few trading days. The next indicator I want to look at is basically a stochastic. Stochastics are basically looking at current price and comparing it to highest highs or lowest lows that have been in the market under X amount of days, depending on how you set that cycle. And we can clearly see on this particular chart that we've gotten an absolute cross in the actual stochastic indicators themselves. So again, I wouldn't be surprised to see the market break and break fairly hard to the downside. However, Yellen has just begun to speak. And depending on what she says and how that's interpreted, I believe will have a lot to do with where we see these markets headed over the next couple of days into next. So traders, in other markets that we're currently looking at, crude oil is a market in which I think is attempting to find support, I should say, and I believe will probably move a little bit higher. Although, as I said on yesterday's report, we are caught within this really solid congestion period, 44 on the downside. That's absolutely a definitive support level for the market. And in terms of resistance, it seems to be roughly at the 48 level. So we've got really a $4 range within the market. I'm not comfortable buying this market for long term until it breaks above this 48. I'm not comfortable selling this market until it breaks, or if it breaks, I should say, below 44. Short-term traders can buy 44, the low 44s, and look to sell the 46 and 47. And because it's trading within this range, stops would be, if you're short, would be just above 48. If you're long, would be just below 44. But we're sitting on the sidelines until we get a clear indication of which way this market wants to go. And then lastly, traders, the fact that Yellen is now speaking, as you know, we saw the dollar trading under pressure for the better part of the day. You can now see that this market has gone green ever so slightly. It's in essence unchanged, but it's certainly not trading negative on the day anymore. And I wouldn't be surprised to see more dollar strength come into this market, depending on statements made by Yellen in her current speech in Amherst, Massachusetts. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review in trending markets. Bye-bye.